Hannes, I'm just curious, how has this market shift in Fed policy expectations, is that a turning point, do you feel? And to what extent has that changed sentiment, importantly, amongst family offices in terms of how they allocate?
Well, it is certainly a shift in sentiment. And I thought the previous segment with Ed, who talked about his views on the likelihood of the Fed being done and potentially even lowering rates, I think that's a view that's shared by a lot of family offices. And so what we've seen over the last 3 months particularly is a shift back out of cash into risk assets. We've seen that done by family offices all around the globe. The one notable exception is actually Asia. We can talk about why we think that Asian family offices are behaving a little differently, but really we've seen a shift in the ability to take risk and a shift in the willingness to take risk. And by the way, just to add, it's very much in line with our house view. The chief investment officer of Citi Wealth has gone overweight equities for the first time since 2020. And in general, shares a view that we could see a broadening of the EPS recovery that would reward, broadly speaking, risk takers.
So let's get into a little bit more, Hannes. Why is it different for Asian family offices? Why are they sort of bucking what is otherwise a global trend?
Yeah. Well, look, I think there's two main factors. The first one, when we look at the investments that Asian family offices have been making over the past few years in this environment of easy monetary policy and in this environment of globalization, a lot of the investments were fairly risky. So what we're finding is the allocation of Asian family offices to risk assets is higher than family offices in other parts of the world. Giving you an example, according to our studies, Asian family offices hold about 44% of their assets in private equity and public equity. So that's almost half of their assets in equity type risk. Compare that to the allocation to cash and fixed income, which is around 32, 33%. So a lower allocation to low risk assets than higher risk assets. That's a bigger differential than we see from family offices in the US, in Europe, or in Latin America. So coming from that position, Asian family offices still have more risk than many others have. And so it's harder for them, I think, to add to risk at this point. The second important point that we need to bear in mind when we look at equity markets have rallied a lot more in the US than in Asia. So if you take the S&P 500, is up about 18, 19% this year, where obviously if you think of the Chinese stock market or the Hong Kong stock market, we haven't nearly seen that kind of movement. So from an allocation perspective, they're more heavily invested in Asia. And a lot of the topics that you talked about in the previous segment, the potential slowdown of China, the pulling apart of the supply chains, is definitely having a strong effect on Asian family offices and the businesses of the families than family offices in other parts of the world. And that affects the asset allocation.